All right, guys, welcome. I'm glad that you're here. If you're someone who is seeking uncommon results, this podcast is for you. Success, happiness, and wisdom. What do these words mean to you? I think we can all agree that we'll probably all have slightly different definitions of each. In these podcasts, I get to dive deeply into conversations with some amazing innovators, influencers, and trendsetters that have had different versions of how they define the terms, yet have come out on the other side with amazing, uncommon results. At some point in their lives, they have decided to unshackle themselves from the norm and go beyond all boundaries. Welcome to the show again, everybody. Again, this is Beyond All Boundaries, and a good friend of mine, Aaron Stoneberg, is out of Fargo, North Dakota. And I've known Aaron now for a couple of years, and Aaron's in the mortgage space, in the lending space, and he's one of those go-to guys that when I'm working with clients and I'm working with people, Aaron's just always top of mind, always just on the know, and he's just been a really great resource. So Aaron, welcome, and thanks for coming on the show, man.
Awesome, John. I appreciate it. Thanks so much.
So why don't you give everybody a little background? I mean, you look like you're 22 years old, right? So
yeah, still 18.
Still 18. So why don't you give a little bit about a background and kind of, because Aaron, you've been really successful in the mortgage industry, right, at such a young age. And so why don't you kind of talk about your background and, what led you and got you into wanting to get into the lending space and helping people on the real estate side?
Yeah. Well, I guess it all started in college, and I realized that the Division III baseball career that I once thought I had, it wasn't necessarily going anywhere. And I love sitting and talking to people. I love numbers. So all I did is I went online, took a look at a couple different internships that I had, and I found another Hamlin graduate. I went to Hamlin University, and I found another Hamlin graduate that was hiring at the time, and had an interview and sat down, talked to him a little bit about the mortgage industry and what I knew coming out of college, or even it was a couple of years before I came out of college. But it really kind of took me right away on it. I loved sitting down. I loved crunching the numbers and having that time kind of in your office and put together plans for people. But then again, it wasn't 100% that. You also had the opportunity to go out and shake hands, greet, and meet people, right? Talk to clients, educate clients. So sitting there and watching people, for the first couple of years, and learning about underwriting, learning about processing, learning about how to market yourself. That was fantastic. I loved it. I loved every single second of it. It was kind of funny because one of my first meetings that I went to, and I was still in college, and I probably had this lime green shirt with a bright tie or something trying to stand out, right? And I walked into the meeting room, and every single person in that room, I mean, they had to be, 50, 60 years old on the mortgage side. And I was in Minneapolis at the time. So I remember getting asked, I think, hey, I think you're in the wrong room. This is for Minnesota Mortgage Association. This is for the lender side. And I went, oh no, this is me. This is, I'm here, and I'm just, here to learn. I'm here and I'm new. So I saw it more of as an opportunity to kind of, set the groundwork right then and there, just to learn as much as I could throughout the industry, throughout my time at the company. And obviously, as soon as you get into sales, you just learn, you adapt, and you just take bits and pieces from every single person. So, no, I loved it, and it was a great time in Minneapolis. And I just came up here. Me and my wife came up here about 3-4 years ago now at this time, and we love the North Dakota market. They always say Minnesota nice, but people aren't necessarily Minnesota nice until you get to the North Dakota Moorhead area. So.
So was what you mentioned about going to school at Hamlin? Was your education in economics or finance, or what were you studying there?
Yeah, I was actually in marketing. I first started out as a marketing intern at Rubicon Mortgage Advisors. And during that time at Rubicon Mortgage Advisors, I went to my boss at the time. His name was Dan Ayler, and great guy. And I looked him in the eye and said, I don't care what color sheet this paper this is. I just want to get into sales. I want to go out and I want to talk to people, right? I learned a lot throughout that time and kind of the marketing side, because again, being self-employed and having people around you, you still need to market yourself, right? But I really honed in those next couple of years in school, and obviously within the finance side, just more towards the finance and kind of learning how does money work? What do you have to do? Why do rates change every single second of every single day? That was kind of more of the niche that I had. But Yeah, the degree, my wife still gives me a lot of grief to this day. The degree is still the marketing side, even though I'm in finance.
Well, but it is truly marketing, right? Because I mean, you
Mhm.
talked about, you are self-employed, right? I mean, you work out of a firm, but it's your business,
Yep.
and everything that you're doing is marketing in relation to getting yourself out there. So, what would be one of the things that again, I mentioned that you are uber successful. I mean, the numbers that you're doing and the amount of loans that you're doing. What would you say would contribute to your ability to do so much business? What is it that draws you to people, or what is it to where you're able to just crush it?
Yeah, I mean, everybody has to know, like, and trust you. Number one, it's not something that happens overnight. I mean, you take a look at the opportunities, you just keep on honing in on your craft, you keep on following up. Those type of things are what I can contribute to, kind of the success I have. And obviously taking a look at people, else in the industry, you always are striving to get better and trying to get more refined, or trying to get a little bit more um, direct, more so. But it doesn't happen overnight. I mean, it's conversation after conversation, it's follow up after follow up with people. There's no silver bullet, there's no magic potion to it. It just is putting in the time, putting in the work, and putting in the effort. And yeah, I mean, there's obviously more to come, and I've learned a lot throughout the time that I've been doing this. But um, you know, it just is keeping on asking questions, keep saying hungry, more so.
So what would you mentioned that you said you learned a lot. What would be as your young career started out? What would be is like one of the biggest takeaways that you've learned that's really helped you in growing your clientele and your business?
Yeah, I think it's just the process. I mean, the season, we just got done with an extremely busy time, and right now it's an extremely busy time for being fourth quarter and looking into first quarter coming up next year, which is where the rates are at. But at this time last year is a completely time where it is now. I thought, going into Q4, Q1 of 2020, 2021, I mean, it should be the slowest time of the year, which it's not. It really isn't. It really hasn't slowed down too much. But just having the time and having your calendar set, having everything kind of graphed out, thinking and planning the night before, sitting and talking, not necessarily, hey, next week looks a lot easier. Maybe we can have that tough conversation, or next week looks a little bit easier. We can go over and change the process, change the system, and tweak things. But doing it early enough in the process where obviously it makes an impactful difference. And we had a couple meetings last week where, again, like I said, it was a busy month. It's still a busy month, even with the holidays coming up. But we needed to have that, set 2 hours just to hammer away on what needs to change, what needs to be refined. And it's, again, you're not taking axes or machetes to your process. You're taking bits and pieces that you can go and refine. So I learned to have, I guess, to do that earlier versus later, because as soon as it's later, you're just going to keep pushing it off and pushing it off, and there's going to be better and bigger things that you keep on coming along the way. But having this, taking it right away is probably the bigger key that we've learned in a couple of years.
Were your parents entrepreneurs? I mean, where did you kind of come up with the entrepreneurial mindset? I mean, again, you work with the firm, but really it's your business, right? And you're running your business. So, I mean, did you always think you'd be not? I know that we went to school for marketing, right? But was it something that you always had a desire to be your own boss, or was it just kind of like, I'm going to school for this, and we'll see what happens?
Yeah, I always wanted to get into management.
Ouch.
Yeah, I know. And that was an eye opener when as soon as I looked at what management was, more so on kind of the people and the process and getting through it, and kind of the steps that you have to take in order to get into where you want to be. But when I was in high school, I started my own baseball camp. Right, I remember taking a look at the head coach, and I walked over there and I asked him if it was something that it's okay if I started the camp, and he said, "Well, I got my camp." And I think he was charging $45 per session. So what did I do? Of course, I just undercut him. I was charging $30 a session. So it was kind of that, and learning to just talk to people. And again, my clientele were parents, right? I'm sitting in high school, and their kids are only a couple years younger than me, and you're coaching them. And then all of a sudden you're trying to turn around and, get the check and get the money order from them and all that stuff. But I liked it. I like going out and kind of creating your own, and again, being the quarterback of whether it's your income, whether it's your house, whatever it is, right? All of the benefit falls on your shoulders, and all of the losses, they fall on your shoulders too. And I kind of like that added pressure with it.
So what made you want to come back to Dakotas? I mean, you were in Minnesota for quite a while, right? And then after college, you kind of were working down there. And then, what was the transplant, or what? Because where are you from?
Yeah.
Where are you from again, Aaron?
So I'm from Hastings, Minnesota, about a half hour southeast, right on the Mississippi. Yep. So I went to Hamlin, and I mentioned the guy's name. So Dan Ayler, he came over and he tapped me on the shoulder and said, North Dakota, it's a great, it's a great town, great city, up and coming, because again, this is a couple of years ago, but things changed drastically year over year. It's a great place. It's a great place to have a family. And honestly, being a Minneapolis kid, I've never even been to Fargo before. My first day in Fargo was the day I accepted the job. So I remember pulling into Fargo, and my wife gives me a call, and she says, "Hey, FaceTime me right now. I want to go and see what Fargo looks like." Because every single person that you talk to in Minneapolis that hadn't been to Fargo in 15 years, they just say it's a farm town, right? Oh, it's a farm town. What are you doing up there, right? So I remember sitting there and FaceTiming her, and she's like, "This is like, there's a mall right here. There's a bridge. There's cars everywhere. Like, this is not anything like what people were talking about, right?" But we fell in love with it. We fell in love. So I remember it was kind of that period of, do you want to be up here? It was kind of like a 3-month trial run at the time, but taking a look at everything, taking a look at the growth. I mean, even being here for 4 years or so, to see the new development, to see the expansion of everything. It has been crazy, and we fell in love with it. And obviously we love the town, we love the community, we love the people.
Yeah, Fargo's really been booming in the North Dakota areas. I mean, it's been crazy, the development and things like that. So tell me a little bit about your process, I guess, as it relates to on the mortgage side. I mean, are you doing any commercial deals, or is it mostly residential? Talk to our listeners about that.
Yeah, so it's all residential. So anything from 1 to 4 unit residential properties, whether it's an investment property, second home, lake home, obviously your primary residence too, refinance, purchase. I mean, a majority of it too is in a quick consultation, a quick meeting with someone. We take a loan application, we hammer in the details. What do you make? What's your social security number? How much income do you have? And again, what are the assets and what is everything else like? We're doing that in a very, very short period of time. Okay. A lot of people just don't know enough about it. And again, that's where the education comes in. You just have to teach people, but they trust people, whether it's a significant other, whether it's a financial advisor, whether it's a family friend, right? Someone that knows a little bit more than what they do, or maybe they do know their whole financial situation too, which obviously is making it a little bit easier. But I mean, it's taking the time to at least know and understand what are their goals, not only for the home, but their holistic financial side. I mean, you can't go in there and have one conversation in about 15 minutes and know everything about the person, right? It's taking years of planning. It's taking years of preparation in order to get to the home. And again, if they're working with an advisor and, what is the best situation? It's kind of having that collaboration between comfortability in the payment, comfortability in the out-of-pocket expense. But then again, they have to be very, very comfortable in the process and know that someone else is taking good care of them, right? So if you fail on one of those 3 points of comfortability, again, it's not going to be a great process, not going to be a great loan, or not a great outcome for them. But again, just making sure that, again, client experience and understanding that, again, the payment out of pocket, again, every month, the out of pocket expense, and then again, the process and hammering those away.
Are you seeing a lot more of, with interest rates being as low as they have been, now for a little while, right? I mean, are you still seeing a lot of refinances? Is it mostly new purchases, or is it just kind of a combination across the board?
Yeah, I think North Dakota has always been a very, very purchase heavy market. My business has always been a very, very purchase heavy market too. But the refinances, they haven't slowed down. They really haven't. Whether it's people that are sitting here, and especially during COVID, they, maybe we want a second home. Maybe we want a lake home. We can't travel as much as we used to, so we're going to go over and buy the lake home. Maybe it's, we want a little bit more space because the family's growing. And that's kind of where the purchase side is happening. But there is quite a bit of refinances that are happening right now too, because people realize that North Dakota is a strong purchase heavy market. Homes have appreciated. My equity position has increased. And I can go over and I can reduce my interest rate from a 4% to a 3% to somewhere in the 2% even. And I can still keep the same payment with getting more cash out, right? And I can fix the kitchen. I can go and fix the living room, whatever they want to go and do. it's amazing with what just even the small changes in the percentages can do to a loan or to a person's, financial situation.
Yeah, and it's really interesting when you look at the economics behind it. It's people are purchasing things based on payment, not necessarily the price of the house, right? And
Yeah.
so look at a lot of factors in relation to is housing really going up. If you look at the history and the statistics of it, it's not that housing's going up. It's just people are purchasing based on payment, right?
Exactly.
And so it's a really interesting time, right? And you and I have had lots of conversations around that, and you've just been a great resource for me and my clients. And would you think about it like 5 years now? What do you see yourself doing? I mean, do you see yourself expanding on your own someday, or what do you 5 years
Yeah,
out?
it's a great question. I mean, we actually just had this conversation too. I mean, I'd love to have a team, and I'd love to just keep on expanding, right? And not necessarily on the side of where you just want to get too big too fast and take it away. I mean, like I said, the clientele and the client interaction and the client experience has to be everything, right? And my personal opinion is growing too fast takes away from that in some ways. I want to make sure that we are very, very focused on that client experience, very, very focused on obviously the clientele and taking care of whether it's a realtor, whether it's a financial advisor, whether it's the client at the end of the line too. But continuing to obviously refine the craft. And as soon as I feel like, again, that we are efficient enough in what we do and we can afford to take on and keep that same experience with still taking on more and more people or more and more, processors or sellers or loan officers, whatever it is, right? We just want to make sure that that's at the forefront. So I would say between me and my partner, his name is Zach Brodigan. I'd say between me and Zach, we'd like to expand eventually, but we just want to make sure that's in the right way.
What has been the biggest challenge with the market the way it is right now? And again, the interest rates and all the things are obviously, I mean, you're busy, right? But what would be like one of the biggest difficulties or challenges that you guys have been facing with all the business that you're doing?
Yeah, it's capacity issues right now, just in the industry, and trying to figure out what ways you can go over. And, if business has increased 40% year over year, let's call it, and you still have the same amount of people that you had last year at this time, and people are getting burnt out because, again, when COVID hit, that was back in March, right? Interest rates had plummeted. And it was even before then. So you're dealing with right now 9 months of people that haven't really taken much vacation. They haven't, left the house. We're dealing with the inefficiencies of people not being able to go to the office because they're, sitting in Minneapolis, or there's a processor over here. And, it's refined, and it's had to refine because of it, or had to change because of everything COVID related. But on the other side too, it's been the guideline. It's been what has changed too of what you could get for self-employed. What has had to change because of so many people have been laid off, or so many people have been furloughed, or because of the COVID cases increased, right? All these guidelines are going to be national guidelines. They're not going to be specific to North Dakota. They're not going to be specific to Minneapolis, Minnesota, et cetera. So it just is making sure that you're on top, making sure that you're on top of all of the guideline changes, making sure that you're on top and understanding exactly how this affects each and every single client and what their business is like, or what their income position is like. When we were dealing with Brexit, when we were dealing with the first initial housing crisis, it took years before the credit box had tightened up to what it did in about 3 weeks here with COVID. So that's pretty outstanding. It's pretty remarkable to see how much has changed in the short period of time. Right. And to continue knowing that it's not over, right? Things are still changing right now, and things are still changing as of last week, but what are those changes? And again, keeping the forefront of mind of, how does it affect every single individual client?
And you were talking about too, the banking, the lending side of it. They had such an influx that they were, raising rates so they could just keep up, right? Is that trend still continuing? Or
they've suppressed that a little bit. They have. I should say not a little bit. It's been quite significant. But at one point, there was just too much influx of business. There was about $2 trillion worth of mortgage debt they were anticipating this year total, right? And that happened in about 4 weeks. So if you take a look at that, for out of all 12 months, you were anticipating about $2 trillion worth of mortgage debt. Now it happened all within a month. That's outstanding. That's crazy. There's, capacity issues left and right with people. So how do you do it? You want to keep on having the purchase money market, or the purchase business, I should say, come through your book still. And the refinances, because the interest rates are going to stay low for quite some time, and it's been quite some time too, but still into next year, they had to put a halt on it. They had to go over and take the capacity, and they wanted to make sure that you kept on getting the purchases in through the doors, which you want. But they had to kind of put a halt a little bit to the refinances. So how do you do that? You just increase the interest rates and want to make sure that people are still getting taken care of, but eventually, right? You want to make sure that these people that are going to be homeless in 30, 45 days are not homeless. So making sure that we're taking a priority in those purchases.
So what would be the, as you develop and grow your practice, right, and the things that you're implementing and doing, what things, aside from processes, what things are you kind of looking at from a day-to-day operational standpoint that you're continuing to improve upon? I know we talked about processes, but is there anything else? Like, I mean, you have such a good network, with your clientele, meaning people like me or people that are referring you. Are you having to go out and, find business now, or is it to a point to where you, because of the relationships you've built, it's a lot of introduction?
Yeah, I guess that's always the goal, is to get more to be that first point of contact. And starting out, it's not that way because you just don't know the exact consumer. So you have to go over and find the people that are bringing in the consumer. But ultimately, trying to keep on top of your clientele, going over and setting up just calls. It's as simple as, how many closings do you have a year? And can you, at the end of each month, call someone and call the people that had closed loans and congratulations on your home. It was 2 years ago. Hard to believe. Hope the kids are doing well. How's business going? Crazy year. Just staying on top of people. But it's been more and more people that refer to you directly from your past clients that are bringing you business, in which you can appreciate that more just because of that experience, right? But that's been a big thought for 2020, 2021, continuing, is just making sure that you're going directly to those clients and to those consumers, not necessarily relying on the advisors, the realtors, the other people. You're just more over and trying to get the business yourself.
Now, you guys are also not just in North Dakota. What other states are you working out of?
Yeah, so we're licensed in North Dakota. We're licensed in South Dakota, Minnesota, obviously. Our branch is licensed in Florida. I'm going to be licensed here coming up in the next week or so in Arizona, Wisconsin, and then Colorado too. So a majority of the markets, we're looking to expand on that too. But again, I would say those states in and of itself are going to be where primarily a majority of the business that we have coming in is.
And do you anticipate going 50 states, or is it just?
You'd like to. I don't know how many deals I'd be doing in Alaska, but I don't know. I mean, I know enough people that are at least licensed in the bank setting. We're an independent model, so you have to go and get licensed in every single state. But I know enough people that at least you can, hey, if I got this brother in Texas and they need to get this deal done, you can still at least take a look out for them or put them in the hands of someone that you trust for it. But in current mind, I think the Arizona, the Florida, where the snowbird states are, I think those are kind of where we're targeting next.
And there's a lot of people from North Dakota that go to Arizona and Florida too.
Exactly.
I mean, it's obviously the snowbird states, but it's also probably those relationships that you have, and people are trying to buy second homes or third homes and properties down there, and it just makes it easy.
Yeah, they're healthy markets. I mean, honestly, anywhere that there's a healthy market or introduction, it's not terribly hard to get the license over there. Yeah, I would say a majority of the people from Minnesota, North Dakota are going to be down in the Arizona and Florida markets now too.
What would you say, Aaron, for the listeners out here? And there's a lot of people that are really heavily in real estate, but there's just some people trying to, maybe get into real estate and trying to, just maybe get into that market. But and even people that are looking at refinancing, right? Like, what are some things that they should kind of look out for, and things that they should take into consideration, before they sign on the dotted line with, there's these things of, giving me a quote, right? And there's things to, I guess, pay attention to as it relates to making sure it's apples to apples comparison, and just what things would you recommend people to kind of make sure that they're, taking a look at before they move forward?
Yeah, it's a great question. I mean, honestly, every single loan is completely different for each individual, right? Every single situation is completely different. I mean, whether you're going to be moving in, living in the house for 5 years, living in the house for 5 months, right? I mean, people are always so very conscious about the interest rate, as they should. Okay. But it's the holistic mortgage that you should be also taking a look at. I mean, if you're going to be getting in reduction, let's just call it in 2 percentage points, but you're going to be leaving in 5 months, is this the right loan for you? Right? I mean, I could sell you on rate, I could sell you on payment, I could sell you on all these other things, but at the end of the day, is your equity position better? Is your payment better? Is your cash flow better? Does this set up the goals that you were hoping for in the near, short, and long-term future, right? I mean, there's so many differences that you have to go over and look into. And I say that's the biggest thing that we try offering is it's not only just looking at a mortgage, right? A lot of people just get honed in and focus solely on the mortgage, right? But we got to take a look at that holistic financial future and holistic financial plan to figure out what mortgage makes sense for you right now. And again, setting you up for the long term too, if that's or if that's what you choose to have.
Awesome, man. So tell me how people can get in contact with you and if they want to reach out, because I know, I mean, people.
Yeah, I love it.
Right in, right?
So, well, first and foremost, my cell phone, I still have a 651 number. I like to differentiate myself in the Fargo market. So instead of having the 701, everyone at least knows when I'm calling. It's a 651 number. So you can always give me a call, shoot me a text, 651-434-1772. And then also just send an email too. So aaron.stoneberg@fairwaymc.com. So Fairway Mortgage Corporation.com. Those are primary ways of contacting. My wife probably checks my Facebook a little bit more than I do. I'm not too great on social media, being a marketing guy myself. So probably should get it a little bit better than that, but someone at least is checking it. So, no, I would say again, it's, whether you're, looking to buy, talk, or refinance, whatever it is, I'm pretty easy to get a hold of and responsive to it as well.
Well, and I can attest to that too, Aaron. I mean, you always will take the time to visit with somebody to, give them feedback, education around whether it's a good fit or not. I mean, I even know that there's a couple situations where we were working on where it was best for the client to go somewhere else, and you told them that.
Yeah.
And so I think that's, you don't get that a lot. And I just think the ability for people to kind of, have that relationship where somebody that is trustworthy and will, shoot them straight, tell them like, this is in your best interest or it's not. I just think that you've done a phenomenal job in working with me and, a lot of my clients. So if anybody has any questions or regards around mortgages, reach out to Aaron because he does a fantastic job. So.
Well, thank you. Appreciate that.
You bet, buddy. Well, hey man, I enjoyed having you on the podcast. I know we talked quite a bit, but thanks for spending time and just talking about a little bit about your background and the things that you've experienced and learned. And it's fun to watch you continue to grow your business. So keep it up.
Well, thank you.
All right, man. Have a good day.
All right, you as well.